Welcome back to the channel. Today we're diving into some expert insights on Bitcoin's current market cycle. There's a lot of speculation out there, with some saying the bull run is over and others convinced we're just getting started. We'll break down technical analysis, on-chain data, and market sentiment to give you a clear picture of where Bitcoin might be headed. If you're into crypto, you won't want to miss this. First, let's talk about on-chain data. This raw data from the Bitcoin blockchain can give us some interesting insights. One metric we look at is the number of active addresses. A rising number of active addresses usually indicates growing network usage and suggests an increase in demand for Bitcoin. Recently, we've seen a significant surge in active Bitcoin addresses, which is a very promising sign. Another key metric is transaction volume. A high transaction volume indicates that Bitcoin is being used for actual transactions, not just speculation. We're seeing that too. The transaction volume on the Bitcoin blockchain has been steadily increasing. Now let's talk about the hash rate. This is a measure of the computing power dedicated to securing the Bitcoin network. Recently, Bitcoin's hash rate reached an all-time high, indicating strong miner confidence. Based on these on-chain metrics, things are looking pretty bullish for Bitcoin. One of the most significant developments in the crypto space has been the influx of institutional investors. Major companies like Tesla, Square, and MicroStrategy, as well as Wall Street giants like JP Morgan and Goldman Sachs, are now adding Bitcoin to their balance sheets. They see it as a hedge against inflation. With governments printing trillions of dollars, many investors are looking for ways to protect their wealth from the eroding purchasing power of fiat currencies. Bitcoin, with its limited supply and decentralized nature, has emerged as an attractive option. Institutions also see Bitcoin's potential as a new asset class. As more institutions jump on the Bitcoin bandwagon, it creates a snowball effect, further increasing demand and driving up the price. Many experts believe that we're still in the early stages of institutional adoption. This institutional interest is a major vote of confidence in Bitcoin's future. Now let's talk about market sentiment. Essentially the overall mood of the market. Sentiment can be tricky. It's often driven by emotions like fear and greed. However, understanding market sentiment can give us valuable insights into potential price movements. One way to gauge sentiment is by looking at social media. When Bitcoin's price is pumping, you'll see tons of hype on Twitter and Reddit. But when the price drops, the mood can quickly turn negative. Another way to gauge sentiment is to look at the Fear and Greed Index. This index tracks various factors like volatility, market momentum, and social media sentiment, to give you a reading of whether the market is overly fearful or greedy. Historically, when the Fear and Greed Index shows extreme fear, it's often a good time to buy. Conversely, when the index shows extreme greed, it might be a good time to take some profits off the table. Right now, the Fear and Greed Index indicates that the market is in a state of neutral sentiment. Let's move on to technical analysis. Charts can tell us a lot about the market's psychology and potential future price movements. One of the most basic yet powerful technical indicators is the moving average. A common strategy is to look for a golden cross, which occurs when the shorter-term moving average crosses above the longer-term moving average. This is generally considered a bullish signal. We recently saw a golden cross on the Bitcoin chart, which is a positive sign. Another indicator that traders look at is the Relative Strength Index, or RSI. The RSI measures the magnitude of recent price changes to evaluate overbought or oversold conditions. Right now, Bitcoin's RSI is hovering around a neutral level, suggesting that it's neither overbought nor oversold. When combined with other factors, technical analysis can help paint a more complete picture of the market. Finally, let's take a look at historical trends. Bitcoin has a relatively short but volatile history, and by studying past market cycles, we can gain some insights into what might happen in the future. If we look back at Bitcoin's price history, we can see that it tends to follow cycles of boom and bust. These cycles are often driven by factors like technological advancements, regulatory news, and market psychology. One of the most well-known cycles is the Bitcoin halving, which occurs roughly every 4 years. During a halving, the reward that Bitcoin miners receive for adding new blocks to the blockchain gets cut in half. This reduction in supply has historically led to price surges. The last halving occurred in May 2020, and we've seen a significant bull run since then. By studying historical trends and understanding the factors that have driven past market cycles, we can make more informed investment decisions. So, there you have it. 5 key indicators suggesting that the Bitcoin bull cycle might still be on. The on-chain data looks positive, institutional investment is pouring in, market sentiment is relatively balanced, technical indicators are flashing bullish signals, and historical trends suggest that there's still room for growth. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more crypto insights. It really helps support the channel and helps us reach even more people interested in the crypto space. Leave a comment below with your thoughts on Bitcoin's future. Are you bullish or bearish? Let me know in the comments section below.